Good morning, this is Richard Capsh in Chicago with some comments on the markets. Today is Wednesday, September 1st. The stocks are mixed today. The Dow's a little bit lower, the S&P and the NASDAQ are higher. In the currencies, the dollar's a shade lower and very thin trading. And crude oil is down about $1.10. And gold is down about $3 or $4 right now to about $18.14. Thin trade stocks are posting modest gains this morning, with the index is coming off the 7th consecutive monthly gain in the stock markets. This is the longest winning streak for stocks since January 2018. Economic numbers, while still positive, have been somewhat disappointing, and that's making it more difficult for the stocks to show gains in here. Yesterday we had the consumer confidence index came out, was 113.8. That's somewhat lower than expected. They expected 123.1, and compared to last month's 125.1. So consumer confidence index is negative. Consumer spending constituting 70% of GDP. That doesn't bode well for stocks. This morning we had the ADP employment report. ADP reported that the economy, according to their numbers, created 374,000 jobs in August. That's up from 326,000 jobs last month, but it's way below expectations. They've been looking for 600,000 jobs this month. The ADP number is important because it's kind of a leading indicator as to what the main jobs report will show when it comes out this Friday. We got two manufacturing PMIs that are due this morning, market manufacturing PMI and the Institute of Supply Management Manufacturing. Those are expected at 61.2 compared to 61.2 last month, so it's unchanged. And the ISM is expected to come out at 58.6 compared to 61.2, so those are a little bit weaker. If they come out lower than that, that also makes it more difficult for stocks to show gains in here. The other thing, we're starting to hear talk that maybe there's some signs that the pandemic is easing, even though the headlines are still worrisome. But based on anecdotal data, it looks like maybe easing up in here, and that would be a positive for the markets. Anyway, I look for stocks to kind of fluctuate, move sideways as they wait for Friday's employment report. The currencies, the dollar is somewhat lower, and I think it too is in a narrow trading range. With anticipation of the dollar moving lower. The crude oil is about $1 lower today. There's reports that Chinese demand is down, and both manufacturing and non-manufacturing indexes fell to 1.5-year lows. And China's economy seems to be the one that's mostly driving demand for oil in here, so that's a little bit negative for oil. The other thing that's going on is OPEC is meeting today to talk about whether or not to increase production. I don't think I can't see them increasing production at this point. Most of them are interested in their own. They want to keep prices higher to just sell their own oil. So, but that's hanging over the market today. So crude oil looks like crude could move lower over the next day or so. Gold is down $3 an ounce. We're in a trading range between 1,800 and about 1,820. not going anywhere. Numbers through the rest of the week, and big numbers. Friday's employment report. Non-farm payrolls expected to come in at up 770,000 jobs compared to 943,000 last month. So we'll see if they make that based on the ADP report. They could have some difficulty, coming up with 770,000 jobs. So we'll wait and see. Unemployment expected to dip to 5.2 from 5.4%. And average hourly earnings up 0.3. Last month they were up 0.4. Two other numbers due Friday. The market services PMI is expected to come in at 55.3, and the Institute of Supply Management Services Index expected to come in at 61.6. So the bottom line, I look for trading ranges in both stocks and the dollar, with not a lot of volume as they wait for Friday's employment report. And that's about all we've got today. We will talk again on Friday. Thank you.